Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. The start to a better life or a better world or a better future is simply our belief that it is possible. Market-wise, let's take a look at it out here. We had the Dow Industrials up 22, NASDAQ down 21, S&P's down 3.5, gold contract down $11.70, trading at $1,233 an ounce. Silver down 23 cents at $15.29. Platinum down a buck at $9.56 an ounce. Copper flat at $2.23 a pound. Light sweet crude off 73 cents, trading at $36.45 a barrel. Bonds, you had the 10-year down 2 ticks, 128.11, 30-year flat, 161.15. The 10-year note and the 30-year bond, folks, continue to go lower. They can't hold price. Last 2 days, they're in ABC structures on the way down. Last 2 days, they try to get higher, sold the babies right off. King dollar's flat at 96.66. The euro is up 7 ticks at 111, and the yen is trading at 113.12. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? We go over and we take a look at the SPY, folks. This is what you have happening in the SPY. The SPY right now is trading at $203.17. Bottom line, we had taken out the B point, taken it out with volume on Friday. That B point was $201.35. Yesterday, you go sideways. Today, we back down with lighter volume. You reject lower price. We go to 201.05. We close at 202.17. This baby wants to travel up to the 209 area, which is just going to be a mind blower, but that's where it wants to go. Inside the SPX, the cash S&P, you're trading out here at 2013. That little baby wants to run up to somewhere about the 2081 to 2095 area, which is just pretty wild because the high in this is 2116. You know, you're in an ABC structure on the way up. You're at the first day of a 2-day Fed meeting, which is going to be wild. 2 o'clock tomorrow afternoon, folks, is the number. Gold contract. What do we have with gold? Gold contract today came into lower price, lighter volume, rejected lower price. Bottom line, gold wants higher price. We traded down to 1266 today. You did 168,000 contracts. That's going into 360,000 contracts, 341,000 contracts, 226,000. Bottom line, gold continues to want higher price. Bonds. Now, the 10-year note has been giving the cleanest information in the 30-year bond that they want lower price, higher yield, which gets the S&Ps wanting higher price. The 10-year broke a B point last Thursday with volume. It did 1.6 million contracts on the break lower. Yesterday, the 10-year got to 128.19. Then it closed at 128.0. No, let's see. We got to 128.19 yesterday. We closed at 128.07. Yet today you go to 128.26. Right now we're at 128.10. In both cases, you failed on price and volume. This baby wants lower price. So that's going to be intriguing in the aspect of what the Fed's going to say tomorrow, because when the bonds do go lower, that, not the Fed, that is saying someone's selling bonds, and that is raising rates. Your short-term rate right now is still very inexpensive. You need a mortgage, go get it. You want to refinance, go get it. We're at 1.96 on the 10-year, and the 10-year is what dictates mortgage rates. Now, let's go over to King Dollar. We look at King Dollar. What you have with King Dollar is this. King Dollar can't get out of its way. King Dollar out here trading at a price point of 96.64. This is the index. This index tried to get to higher price today. 12,000 contracts. Well, the 12,000 contracts were coming against 71,000 contracts. That is a monster number to come against. Number one, failed on price, failed on volume. What King Dollar is doing, folks, is that King Dollar is making its way down to the August 24th swing low, which is quite a move. That August 24th swing low is hanging out there right now, and that price point is 92.52. Now, how we get down there is really important also, because if you break that 92.52, you are going not only lower, you're going dramatically lower. It would be very fast. It would be very furious. We go over and we take a look at the silver contract. What we have with silver, silver continues to build cause to get up and into the swing point from October. Now, silver has been lagging and has been lagging for quite a while. The silver equities, however, haven't. The silver equities have taken B points out of ABC structures on the way up. I like what silver did out here today, and this is what it did. The last sign of strength that we had in silver was March 4th. Silver went from a price point of $15.50 to $15.84. We did 85,000 contracts, so you had the wide price spread. You had the accelerated volume, beautiful. What you always like to see is you like to see to back into that to show that, okay, do we have any sellers? Well, today we backed into that. We backed into it with 36,000 contracts versus 85,000. That's what you're looking for when you're looking for a building cause aspect of going topside. I suspect what we've been doing here since the 13th of February, you're building some cause to see how silver's going to handle the 1624 area, which is the swing high from October 15th. If we go, we take a look at the QQQs, you remember something, the SPY is an ABC structure on the way up. The Qs are real close, except that what had happened is that when they actually had volume into their B point, just missed it by 2 or 3 pennies. Bottom line, the SPY looks to me also that it's going to run up into the 113.08, because what the SPY did do is that last Thursday, it did 44 million shares. It ran to $105.86. Well, the B point on this is $105.85. You know, and you really, I can take the B as 106.35. Bottom line, you can see the differential. It runs into it with monster volume, takes it out, just barely. Bottom line, the shocker will be the next leg up in this marketplace, when in fact, I still think you're going to come down, because when you take the leg that we went down versus the leg that we went up, it's dramatically lighter volume, and it's just enough to get everyone bullish. Deviance in the market. Market's job is to do what? Take the most amount of money with the most amount of people in the least amount of time. That's the most efficient mechanism I've found that can do that. You stay right there, folks. We'll come right back.